Hey guys, James here with Waterford Business Solutions, and we talk a lot about accounting on this channel, and there's really a lot of different things with accounting going on that we need to look at. But a lot of times the businesses we're dealing with are more small businesses, typically businesses doing somewhere sub $30 million. They're privately held, maybe a few partners, but we're not dealing with large corporations. We're not dealing with huge people or anything like that going on there. So that is really where we tend to focus. And the type of accounting that we would do for a one-man show is going to be a little bit different than the type of accounting we're going to do for a $5 to $10 million business, but it's still all fairly similar compared to the type of accounting that we would end up doing for a company like Walmart or Target or publicly traded companies or anything and everything like that. So we wanted to talk about just some small little differences that you're going to see between accounting for a publicly traded company or a large corporation, multi-million, hundreds of employees company versus a company with sub 100 employees doing generally sub $50 million a year, not something publicly traded, something with a few different ownerships, etc., there. As we get into everything here, it's always important to remember that educating yourself, understanding your finances, that's why we have this YouTube channel, and I strongly encourage you to make sure you're constantly helping yourself out and understanding anything and everything you can. Finances are always a very difficult task. Trust me, I deal with it every day, and even on those days I'm wondering myself how much I understand certain days. That's part of the reason I started this channel, is I want to help my clients and people just like them to better understand exactly how everything works, exactly what they can do to better understand their business. And so we put out videos every Monday for people to assist them in understanding that. So I invite you to go ahead and like and subscribe to this channel. Go ahead and turn on notifications to get notified when we release those videos on Monday. That way you can continue increasing your knowledge on financial and business related topics. Now ultimately, all accounting really should follow a GAAP standard, generally accepted principles of accounting. This is something that is pretty much, it's definitely nationwide. It's overall a fairly standard worldwide standard of principles. There's a ton of them here. I'm not even going to get into discussing all of them just because there's so many different principles here. However, it is a great way to base everything off of. Most of your accounting programs, your QuickBooks Online, your QuickBooks Desktop, your Xero, their basis is going to be on a lot of GAAP standards. There's going to be some things that, hey, you might do this a little bit different or you might do this a little bit different, but overall, most people are going to roughly follow those GAAP standards. Now, the bigger your business, the more specific you have to follow those GAAP standards, because now you're not being regulated just by the IRS, you're also being regulated by the SEC. So when we get into these large corporations, the SEC has requirements of this is how things need to be put here, this is how things need to look, just to have a standard across so that any type of investors, anyone buying stock, anyone like that, has a consistent expectation of what's going on. When we're dealing with small businesses, we're not generally going out to outside investors. We still want to have, to a point, a decently GAAP standard set of books, but we may not be as specific with everything there just because we are not going out consistently to investors and we're not having to be audited on a regular basis. A lot of times with these large corporations, they have to go through a quarterly audit for audited financials to be submitted to the SEC in a timely manner to have everything. Now ultimately, does that mean that you shouldn't follow any of this? No, not at all. Again, if you want to go out and get an investor, or if you want to go get bank loans, or if you want to go increase the size of your business or anything like that, having these GAAP standards can definitely make your business and books more appealing. If you're looking to sell your business, having some type of standard here is great, but we're going to be in a different realm in a small business versus these large corporations. You're also generally not going to have to be audited every single quarter. You don't have to have a CPA coming in every single quarter to make everything look a lot better and make everything conform to these standards, and for them to come out and say, yes, we agree that these numbers are accurate. So it's just going to be some little changes there. But overall, you're still going to have your assets, you're still going to have your liabilities, you're still going to have your income, you're still going to have your cost of goods sold, you're still going to have your expenses. The benefit that you get here is you get to be a little bit more in a small business. What is the information you need to know compared to what is the mandated information for you to report? So now you have one set of books instead of two different sets of books like these large corporations are going to have. You're also going to have a lot less in kind of subclasses and transaction counts and everything else going on here, where a huge corporation like Walmart, they've got a ton of depreciable assets. They're going to have a system just to track all those assets and everything like that, whereas you may have a building, some land, 10, 20 trucks, some tools, things like that. That's a whole lot less than a big corporation like Walmart would have. So you might be tracking all that just on your balance sheet compared to using an outside system. So a lot of times these bigger corporations, instead of using something like QuickBooks, instead of using something like Xero or Sage, they're going to end up moving to an enterprise level system. A Sage Intacct system at minimum, a Oracle-based accounting system. So a lot more complications in those systems that make it even more difficult to track everything. The other thing you're going to have is these huge corporations are going to have massive accounting departments, multiple AP people, multiple AR people, multiple controllers, multiple bookkeepers. A lot of times with a small business, even if you're running $20, $30, $40 million a year, you can get away with 1, 2 people, one person in-house, maybe outsourced to a lot of the work there. They may have 1 or 2 people that are outsourced, but typically the accounting department with a small business, something under 20 to 50 million, they're going to only have 1 to 4 people in the accounting department, and honestly a lot of those people are going to be focused on just collecting debt. So a lot of times you can put that on your CSRs who are calling and scheduling jobs and everything like that. You can also have them call and be like, hey, we still need this invoice paid, etc., etc., etc. there. So that's going to be another big factor that changes there. You're also going to have a difference in loans. When we're looking at these huge corporations, they've got to track easily, and it doesn't hurt for any small business to do this too, but they're required to track how much of their debt is coming due in the next 12 months. So they've got to break out their long-term liabilities from their current liabilities, and then out of that long-term liability say, hey, over the next 12 months, we've got X amount of this long-term liability that's due in the next 12 months that makes it a current liability. They have to be tracking that every single month. And while it doesn't hurt to do that, and you should do it, it definitely helps you better understand where your cash flow is going and everything like that. It's not a requirement. So a lot of these smaller businesses don't do that and don't pay as much of attention to that. So that's going to be another big factor. The other thing that we have difference-wise is really going to come down to the setup of the books and the setup of the equity more than anything. Most small businesses are going to be single-member LLCs, sole proprietorships, multi-member LLCs, partnerships, or S-corps. Those are all pass-through entities. That means that you can draw money out of the company at any time that you want. You can put money into the company at any time that you want, anything like that. But once you get over having 100 shareholders, you've got to be a C-corp. A C-corp locks things down a lot more. You couldn't just one day say, hey, I need $5,000 and pull it out of the company. Because if you pull that $5,000 out of your C Corp, you've either got to pay that back or you've got to pay taxes on that, both personally and from the corporation's perspective, or you've got to have in the corporate agreement a dividend that guarantees you the ability to take that $5,000 out. So these large corporations, their money is a lot more locked into the corporation, whereas small businesses, it's sort of an extension of the ownership as to where and how and when that money works. If the ownership needs to pull money out to invest in another business, or if the ownership wants to pull money out to buy a house, or if the ownership wants to invest money to grow the company, it's really easy to do. But with the C Corp, anything that we're doing there, that just gets really convoluted and really complicated. So they're going to have much more complicated tax issues and equity issues going on there. Ultimately, anything a large corporation does, a small business can also do and should do. I mean, there's a reason that these large corporations are required to do this. But there's a difference between should do and need to do. So a lot of these smaller businesses definitely don't have the same checks and balances, the same complications or anything like that. There's a lot you can learn from these large corporations, but don't ever overcomplicate your business finances and the operations of your business. If you need help figuring out what you should be paying attention to, how to break down your income, how to break down your cost of goods sold, we do specialize specifically in working in the trades with our clients here and making sure that they understand the KPIs of the home service industries and the trades in general. So we'd be happy to work with you there to help you better understand your business. You can give us a call at 864-351-0852 or shoot us an email at info@waterfordbusiness.com. I hope you found this video informational, and until next week, have a wonderful rest of your day.